Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up about 0.8% there. On the S&P Nasdaq 1.2%, Semiconductor 2.6%, Dow 0.6%, Russell 2000, transport, banks, biotech, healthcare, home builders, utilities, retail, emerging market, every single sectors are green today, except the fact that energy is red. Bitcoin up, gold, silver miners are also dollar down, oil down, treasury bond down. VIX is also down. Let's stick with S&P 500 ETF. Spider! 65-minute chart here. So this is where we closed yesterday, and we actually saw a sizable up gap this morning. It would have been better for the bulls if that gap was fully open. However, the bears are not gonna make it that easy. So you see that long lower wick. Bears came down and filled up most of that gap. However, bears were not able to fill the entirety of that gap, as you can see right here. And with that, bulls find some momentum here back up to the upside. And you can see on that first hour candle there. And a lot has hatched because of that first hour move. What happened was buyers were able to get back above the micro-term moving average and my mid-term moving average. And you'll see why it was very important to get above that mid-term, that pink dotted moving average here. And we initially got above the short term, but we're kind of been zigzagging all around it throughout the day. But look at that. The second hour fluctuation. There's a midterm, and micro term is now supporting the bears. It looks like, at least for the day. That's the third hour. You can see bears are trying to push it down on that third hour. There's that midterm moving average along with the micro term. And on that fourth hour, there's a micro term and the midterm. And you see how bears are tried one more time on that fifth hour price action. We actually got below the short-term, mid-term, and the micro-term moving averages, because you can see on that fifth hour, this is what it looked like. It looked as though we're losing those moving averages. However, we ended that fifth hour above. You see that long lower wick here. And the last hour, we did close above the short-term and the micro-term and the mid-term moving average. So as you can see on a closing basis, you can see right here, since that first hour, we were able to stay above my mid-term moving average. Mid-term moving average is definitely acting as a strong pivot here, at least in the last couple days. And so we've been just kind of grinding sideways. And for my long-term viewers, understand this, just one day of getting above these moving averages are not going to be enough. What do we need? We need a follow. If you're a buyer here, and that you're seeking higher prices, you do need to see a follow through to the upside, meaning getting above about 397 or so and close above it to able to solidify potentially that reclaiming action that happened today. However, if the bears bring it down tomorrow and we ended the day tomorrow below 394, that was just a whipsawing action. So it's very important. A first step is obviously getting above these moving averages, but we need that second step to really solidify that move and seeing that follow through move. Let's check out that oscillator. So we've been talking a lot about the bearish and bullish divergences here, going all the way back to November price action. So what we're seeing right now is something like this right here, right? See the early November price action, and that's right here, and that's right. The thing about that is that you can see that oscillator is getting matured here. We got up quite a lot, actually. We actually made quite of progress here. And so it looks sort of similar to maybe we're somewhere here. So basically we're somewhere here. You can see we did get above. Let's kind of zoom in here. You can see that when the oscillator got up here, when the oscillator did advance, the price was able to get above that micro term and the short term moving average, yes, and we did see that follow through move on the next day. So today, however, as you can see, we're not seeing like we're just right on it. We're not seeing like a full on you know what I'm saying, like move right off of those moving averages. The market obviously want us to keep guessing and feel anxious about what might happen tomorrow. So you see, we're just right on this. It's very suspenseful right now, right? Bulls are nervous and bears are nervous because bears understand if we see a follow through, there's going to be no real resistance until we get to about 4 or 5 here, that gap area. And then if bulls can able to fill this gap and this gap, you know what I mean, that could make a way for higher than 410 there. Bears, obviously, we're still like, we moved sideways yesterday. We're moving sideways today with a little problem that first hour. That's not going to be enough. Perfect. Bulls obviously do need to see a follow through. So this is a level where both bulls and bears feeling very nervous and anxious and a little bit skittish about what could potentially bring, you know, what the market might bring tomorrow. And it could be exciting either way. I'm going to come back for you. We'll reassess the situation. Enjoy your evening and look trading tomorrow.